To continue the discussion on the capture of Venezuelan President Nicolás Maduro by the United States and the anticipated economic consequences, particularly for the oil sector, which remains central to Venezuela's economy and global energy markets. We are now joined by economist Dr Iraj Abedian, and he joins us now via our video link. Dr Iraj, thank you so much for your time this evening here in SABC News. I mean, let's start off here. Of course, we saw the capturing of the Venezuelan president yesterday by the US. And one would ask, Venezuela has the largest oil reserves in the world. What implications does this have for particularly the world at large and world economies?
Thank you for the opportunity and greetings to our viewers. I think the short term, as previous commentator also mentioned, we may see a little bit of volatility. But if the United States and more specifically President Trump keeps to his promise of administering Venezuela for the time being until the next election happens, whenever that might be, and specifically his reference to bringing American oil giants to invest in the much neglected oil reserves or oil industry in Venezuela, we could get a very interesting counterintuitive or somewhat unexpected outcome, and that is supply increasing in the next 2 to 3 to 5 years, and the markets will begin to factor that in, bearing in mind that since last year, this time, the price of oil has come down already substantially, almost by 20%, and that was expected to continue into 2026, even without the Venezuelan supply coming on the market. So we could have a very interesting outcome, interesting for the rest of the globe, but I'm not commenting on the political outcome. Yeah. I'm commenting specifically on the oil market, where the largest reserve of oil globally now gets unlocked. In the medium term, it will take 3 to 4 years for it to hit the market. But the very fact that the American oil giants begin to invest, upgrade, and raise and structure the neglected sector in Venezuela could be very interesting in geopolitical terms as well, because it will reduce price of oil. It's good for oil importing countries like South Africa. It's good for inflation globally, but also it will have direct impact on the Middle Eastern politics and the Russia-Ukrainian politics, all of which Mr. Trump has very direct interest in.
And I mean, just yesterday, US President Donald Trump saying that something that you alluded to, that they will be going in to Venezuela with big oil companies from the US. And should we see this now take place, because the US saying that they have taken control of Venezuela, what will it mean for the US economy?
Well, it means cheaper oil. Americans, like many other economies, are very sensitive to oil price. But particularly in the United States, oil price is more of a political thing, because it affects on a daily cost of living of Americans, as it does in South Africa. So Trump wants to declare victory, wants to bring inflation down, wants to somehow compensate the adverse effect of his trade policies, which has not been good for inflation in the United States. But if his action in Venezuela unlock and bring a really almost a flood of new oil into the market, and price of oil collapses, it would be very good for the US inflation, and globally it would have very, very positive growth impact, standard of living impact for the working class and the poor, and all of that is what Mr. Trump wants to claim victory for.
And Dr. Iraj, I mean, what happens on a global scale, particularly on big economies, has a ripple effect on developing economies. What does this mean for countries like South Africa?
For South Africa, if my prediction or expectations pan out, it would be good. Our inflation is already in a very good, tightly under control. Our inflation target has come down, and then we can see our rand is appreciating, which is also good for our inflation. And for all the African countries that are importing oil, it's good news. However, there are also oil exporting countries on the continent, such as Nigeria, Ghana, and so on. For them, that will have the adverse effect, and that would not be welcome outcome. But for South Africa, definitely a good news. Will reduce the cost of imports, the price of petrol will go down, diesel will go down, energy generally will go down, our inflation will go down, and all of that is good news, and that would also underpin further strengthening of our economy, our currency, and that would hopefully bring inflation, not only inflation down, but also interest rates down, which will boost economic growth and the cost of investment and the cost of borrowing. All of that for South Africa at the moment, we are in a good place, and that would have positive impact on the economic front.
And Dr. Iraj, I mean, you make reference to countries, of course, that export oil. How will this now affect those countries?
Look, it won't be good news. Their revenues, their export revenues, their GDP will decline. Even neighboring countries like Namibia and Mozambique, who've been banking on oil reserves and price of energy to be the underpin of their economic growth and development for the next 20, 30, sometimes 50 years. And that's also not going to be that positive for them. However, I believe Mozambique and Namibian oil players or oil exporters and the companies will continue their exploration and extraction of gas, particularly in Namibia and Mozambique. And all in all, for the Southern Africa, it's good news. For Nigeria, for Ghana, and for oil exporting countries, you will see intensification of poverty. You'll see intensification of political tension in a country like Nigeria, which is already bedeviled by tension. Those type of adverse socio-political developments are to be expected.